Hi guys, and welcome to another video on ABML. Last we left off, I said ABML was holding on to the $1 support really well. As you might have seen, this is not the case anymore. The stock has taken a bit of a hit along with the rest of the market. At the time of making this video, the stock is a little under $1, about 84 cents per share. Why is this stock continuing to go down? This stock is down because the rest of the market is down. The Nasdaq 100 is down almost 1.6% since the start of this year. If you look across the board, then all your tech blue chip stocks are down. Nvidia, Tesla are all going down from their October to November highs. But such is the nature of the market. In 2020 and 2021, the market had pumped so much, it was awaiting for a much needed correction. And times like these are the best to buy high value growth stocks. Right now, yes, we are in a bit of a downturn. The small cap stocks are such that they take the first and the hardest hit, and then comes the blue chip and large caps. But the reverse is equally beautiful. The growth stock pumped harder and faster than the blue chips in a bull market. But right now, let's take a second and zoom out and look at the bigger picture. Why is the stock market crashing? As we all know, the US Federal Reserve has been printing a lot of money to combat an economic downturn due to the pandemic. But because of the excess money printing or quantitative easing, we got inflation as a byproduct, which is really bad if left unchecked. To combat inflation, the Federal Reserve has promised to raise interest rates and stop money printing or begin quantitative tightening this year. When borrowing becomes expensive, it hits growth stock companies, especially tech companies, the hardest because they can take some time before becoming profitable. Another big reason for the sell-off is that we're now in the midst of a massive algorithmic traders which are selling small cap stocks like ABML and parking money into safer investments. So when will ABML stock take off again? In reality, no one can tell. But here are some points that we do know. Number 1. Right now, the Fed has become hawkish, maybe more than required, to keep inflation in check. This indicates further red for small caps and growth stocks. Remember folks, the Fed is still printing money and we can expect the tap to be tightening very soon. Number 2, ABML is due to open their pilot factory this year. We can expect a pump if the market sentiment is on our side. Number 3, inflation is transitory. We may be seeing a slowdown of inflation. The inflation rate, or the CPI index, grew only 0.2% from November to December, suggesting a slowdown. If there is no further curveballs, maybe a new variant or supply chain issues, for example, we can expect a reversal of this trend or recovery in the later half of 2022. One really important thing that one should take into consideration is that a stock like ABML may not give you good returns tomorrow or the week after. Investing in this company is like investing in future. This is a good 5 to 10 year investment in my opinion. The stock is risky. It could amount to high returns or it could go bust. 90% of startups fail. The risk is real, but the reward is equally fruitful. We're still very early in the metal recycling space. This emerging industry still needs time, investment, and encouragement to mature and standardize. That's it from me, guys. Please hit the like button to help the algorithm and subscribe to this channel to support me. Have a nice day.